You know, in a market that's just constantly being rocked by uncertainty, where a single headline can shift billions of dollars in a heartbeat, how do you actually build a portfolio that can weather the storm? Today, we're not just looking for a safe place to hide your money. We are actively hunting for companies that are right at the center of this new geopolitical reality. And, well, we think we've found a really compelling one.
And look, this isn't just some abstract idea. As we speak, headlines just like this one are all over the news. The conflict in the Middle East is very real, it is escalating, and it's sending these shockwaves through the entire global economy. It's making investors everywhere, well, pretty nervous. And this is the world we have to invest in. So the big question is, how do we do it?
So, here's our game plan for today. First, we're going to set the stage and talk about what it means to invest in wartime. Then we'll dive deep into our focus company, ATI. We'll look at its business, its financials, the whole shebang. We'll check out its valuation before we deliver our final verdict, and then we'll wrap up by exploring some other ideas for building a truly resilient portfolio.
Okay, first up, Section 1. Before we can even begin to talk about a specific stock, we really need to understand the new rules of the game. What does it actually mean to invest when the world is on edge?
So, you might be asking, why does a conflict happening thousands of miles away even matter to my portfolio? Well, it all comes down to these choke points, like the Strait of Hormuz. Get this, 20% of the entire world's oil has to pass through that one narrow waterway. So with the threat of it closing, you get supply disruptions. And that, in turn, spikes energy prices, it fuels inflation, and it creates this massive volatility that sends investors scrambling for assets that can handle the heat.
And that volatility, that's exactly what leads us to our focus company today. So in Section 2, we're taking a look at ATI, the unseen force. See, they don't make the missiles you see on TV. They make the incredible supermaterials that make those missiles, and a lot more, even possible. This chart right here really tells you everything you need to know about AITI's focus. I mean, look at that massive 68% slice for aerospace and defense. That's the story. This is not a company that just kind of dabbles in the sector. No, it is their entire world. This makes them a pure play investment on the machinery of modern conflict and, of course, commercial flight.
So what does ATI actually do? Well, think of them as master chefs for metal. They create these highly specialized, high-performance materials for things that get incredibly hot. We're talking next-generation jet engines, missile components, that kind of thing. Now, their big advantage, their moat, is that this isn't stuff you can just buy anywhere. These are their secret recipes, proprietary alloys that can handle extreme temperatures and stress that would make normal metals just fail. It makes them absolutely essential. But of course, it's not risk-free. Their success is tied to how many commercial jets are being built. And, like any manufacturer, if the cost of their raw ingredients suddenly shoots up, it could really squeeze their profits.
All right, so that's the story. Now let's look at the hard evidence. It's time to pop the hood. Section 3. Decoding ATI's financial health. Let's look at the numbers that really matter. Okay, let's break this down. First off, revenue in their most important market, aerospace and defense, is up a fantastic 14% from last year. That's crystal clear proof that demand is strong and it's picking up speed. Next, look at that adjusted EBITDA margin. It's almost 20%. Think of this as a signal of their profitability. It shows that because their products are so specialized, they can charge what they need to. But here's the real kicker, their cash flow. Adjusted free cash flow, that's the actual, usable cash the business spits out, jumped an incredible 53% to $380 million. This company is a straight-up cash machine. Okay, the numbers are strong, no doubt about it. But that brings us to the most important question for any of us, right? Are we paying a fair price for the stock? Let's tackle that in Section 4, the price of performance.
Now, at first glance, you see that forward PE ratio of nearly 40, and you might think, whoa, that looks expensive. And you're not wrong, that's a premium price tag. But then, your eyes have to go to the number right below it. Projected earnings per share growth is over 27%. The market is pricing in massive, massive growth. And as you can see from that Zacks rank of buy, the analysts tend to agree that the company can actually deliver on it.
So, the bull case, the argument for the stock, is actually pretty simple. Yeah, the valuation is high, but it's justified by some seriously explosive growth potential. And it's not just us saying it. The company itself is fueling this optimism. They just raised their own guidance and are now targeting a full $1 billion in adjusted EBITDA for 2026. They're basically telling the market, we see the demand coming and we are ready for it. But we have to be honest and look at the other side of the coin. What's the biggest risk here? Well, the whole investment idea is pretty heavily tied to the current geopolitical climate. If tensions were to suddenly and unexpectedly cool down, that urgency behind defense spending could fade away, and investor interest, it would likely leave the sector just as fast as it came in.
So, we've looked at the big picture, the business itself, the financials, the valuation. All the pieces are on the table. It is time to make a call. Section 5, the final verdict on ATI. Our recommendation is a clear and definitive buy.
And we are issuing a 12-month price target of $195.50 per share. Now, this target reflects our strong belief that the company's powerful earnings growth, that 27% plus we talked about, isn't fully baked into the price yet. That gives it, in our view, significant room to run as they keep on executing their strategy.
So let's just boil this all down one last time. The single strongest reason to buy ATI is this. It is an absolutely essential, high-margin supplier that's generating tons of cash, and it's perfectly positioned in a market that has undeniable momentum. The biggest risk you're taking on? It's that this whole idea depends on geopolitical tensions staying high and the cyclical aerospace market staying strong.
But a smart portfolio isn't just about finding one great stock. So let's widen the lens a little bit in our final section, the alternative wartime plays. How does a company like ATI fit into a bigger, more complete strategy?
So if you think of ATI as the specialized high-tech component maker, you might want to pair it with a stable giant like Northrop Grumman. With these monster multi-decade contracts for huge government projects like the B-21 stealth bomber, Northrop offers just incredible predictability in its revenue. Now, for a more modern take on defense, you got to look at CrowdStrike. It's basically a cyber fortress. In today's world, cybersecurity isn't optional in a conflict. It's non-negotiable. And CrowdStrike's dominant position and recurring revenue make it a really powerful growth play.
And that really just leaves us with one final thought to chew on. In an era where conflict and volatility really do seem to be the new normal, maybe, just maybe, the biggest risk an investor can take is not being invested at all in the very companies that build the shield.
So what company do you think we should put under the microscope next? We really want to know. Drop your suggestions in the comments below. And hey, if you want more deep dives just like this one, make sure you hit that subscribe button. We'll see you next time.